This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, May 7, 2018. Last week, commodity prices and economic reports were mixed. U.S. steel production fell to a multi-month low, but remains ahead of the last 2 years as low-price imports remain a major factor in the U.S. economy. Oil rose about $1.50 a barrel to a new multi-year high on continued concerns about the U.S. confronting Iran on the nuclear deal, which could take Iranian oil out of the market. U.S. gasoline prices are hitting new recent highs on that news. U.S. oil production hit a new high of 10.61 million barrels per day. Great news for U.S. jobs and oil company profits, but bad news for consumers due to the rise in gasoline prices. Iron ore remained at $67 a ton, near a multi-month low, yet well ahead of 2 years ago on good global demand and supply. Scrap steel heavy melt #1 prices show here at $353 a gross ton, more than double about 2 years ago, but prices fell $15 to $20 in most markets for obsoletes, with busheling mostly flat. There is a good balance of supply and demand in the market. Hot dip galvanized steel rose to $1,200 a ton, a new multi-year high as steel mills expand margins in a good economy and as scrap prices are falling for many grades. Some mills are trading higher prices for less volume. Copper rose a penny to $3.08 with no major news or events in the market other than a slow, steady growth. We are up about 2 cents this morning to about $3.10. Copper remains off the multi-year high of a few months ago on this 5-year chart. Copper inventories fell slightly, remaining somewhat high for the past 18 months on good but not great global demand. Aluminum prices rose 6 cents to 105.7 on continued good demand combined with tariffs and U.S. sanctions on Russian aluminum producers. Aluminum LME inventories fell, remaining near about 8-year lows as prices remain very high. Cardboard fell $5 a ton to a new multi-year low, with China's shipments down and despite a good global economy. China announced a stunning and sudden 30-day halt to almost all U.S. imports of scrap metal, which will have a major impact on many industries. A reality is China is starting to generate significant amount of scrap within the China market itself. April U.S. vehicle sales fell to an annualized rate of 17.15 from 17.48, which remains a huge number by historic standards, but down in recent months. The U.S. created a solid 164,000 jobs last month, up from March's 135,000. While not shown here, a stunning 410,000 people dropped out of the workforce. Most headlines missed that with the 164,000 jobs created and 410 out of the market, that drove the percent of unemployment to a new 18-year low of 3.9%. Yes, overall great news, and it continues to mean it's tough to hire workers. Related, 3.9% goes to 7.8% when adding the unemployed that stopped looking for work but want a job, plus part-time workers that want a full-time job. The good news, bad news is that only 62.8% of the people over 16 years of age are actually working. We would be a better country if we could get some of these 37.2% non-workers into the workforce. April's U.S. Manufacturing Market Index stood at 56.5, pointing to the strongest pace of manufacturing expansion since September 2014, more than 3 years ago, with quicker rates of output and new order growth. Wall Street's Dow Jones finished the week strong at 24,263, down a small 47 points for the week on very strong corporate earnings. Tax cuts are helping earnings, stock buybacks, and dividend increases, which is terrific for 401ks. Wall Street continues to make many wealthy on paper. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.